Hey everyone, welcome to this week's Market Essentials update for the month of May. Unfortunately, here we are yet again, starting off another update by giving unwelcome news that we've had another cash rate rise, up to 3.85%. No doubt, the Reserve Bank Governor Philip Lowe will likely face criticism for wrong-footing almost everyone, including myself, with a surprise interest rate rise. His bold call to lift the cash rate was based on several very good reasons. The hot jobs market, the employment rate is accelerating services inflation. We've got rebounding house prices and weak labour productivity growth. All of that, no doubt, tipped the scales for the RBA board's hand to lift the cash rate for the 11th time this cycle to 3.85%. The Reserve Bank surprised 0.25% increase in interest rates this week is unlikely to slow down existing home buyer demand, in my opinion, but further rises would certainly reverse the emerging housing market recovery. Confirmation of a second month of national house price gains has forced another group of the nation's respected economists to pull out the magic eraser and revise their forecast. So with prices only falling 9.1% peak to trough, CBA, Commonwealth Bank of Australia, has abandoned its forecast of a 15% fall and instead is looking for a 3% gain in 2023, 5% rise in 2024. AMP's veteran economist Shane Oliver also did something similar, stating that his call for prices to fall between 15% and 20% was off the mark. He now expects prices to be flat in 2023 and rise roughly 5% in 2024. Rents across the capital cities have jumped almost 12% over the past 12 months. That is the strongest annual increase on record. Sydney's vacancy rate is now 1.2%. So the mismatch between supply and demand, that continues to really be the driving force that's pushing capital city rents much higher. Over the 4 weeks to April 30, total supply of capital city rental listings was negative 21%. That's below the level recorded this time last year and a negative almost 40% below the 5-year average. The median weekly rent for an apartment in Sydney has also gone up. It's now almost $665 per week. That's up 7.3% year to date and 19.1% higher than it was 1 year ago. The thing on the ground though is that there does seem to be a resurgence in buyer numbers. You know, a lot of those tenants are spilling into buyers, and we're seeing a bit more confidence out there now for those properties that are ticking all the boxes. So it could be that there is a greater sense of certainty now for buyers. Really, given that the rates have been showing signs of plateauing, and buyers potentially may feel to have a better understanding of what they're up for if the interest rates remain at this level. Either way though, I'm starting to see prices being adjusted upwards by most agents, and that could be the beginning of the recovery into the second half of the year. Sydney has already shown a 1.3% rise for April, so if you are considering a purchase, keep in mind that if the market does start to move again, today's prices, they could be as good as they get. So with low building approvals and surging population demand that's been well documented, those all point to the beginning of a much earlier property market recovery. So you might find yourself at an advantage buying something more affordable at today's level, rather than getting pushed out of the market altogether. So that's all for today. Thank you so much for watching as usual, and look forward to seeing you next time. Thanks very much.